You guys sent in some fascinating articles about potential stock splits in 2025.
Yeah.
And we're going to do a deep dive into those today for you.
Okay.
We're not just looking at any high-priced stocks, but companies that are showing such explosive growth that a split might just be a great signal to jump in.
Right.
We're going to be focusing on some insights from the Motley Fool,
Okay.
those investing gurus.
Yeah.
They've got some pretty interesting predictions for us. So what do you say? You ready to break this down?
I'm ready when you are.
All right. Kicking things off, we've got Fair Isaac.
All right.
You probably know them better as FICO.
Yeah.
The credit rating folks.
Mm-hmm.
Their stock has had a pretty remarkable year, up almost 80%.
Wow.
Which has pushed the share price well over $2,000.
Yeah, and Fair Isaac hasn't split its stock in over 2 decades.
Wow.
What's really interesting is why they might consider it now.
Yeah, so why do you think Fair Isaac is ripe for a stock split? Is it just about the price?
Well, the Motley Fool suggests a 20-to-1 split, bringing the price down to a cool $100.
Okay.
Which would definitely make it more accessible.
Yeah.
But the bigger story here is their financial strength.
Okay.
I mean, those guys are a cash machine.
Really?
They've got gross margins around 80%.
Wow.
And operating margins above 43%.
That's impressive.
That's incredibly impressive.
Okay, hold on. For those of us who don't speak finance fluently,
Yeah.
what do those margins actually tell us about a company?
Think of it this way.
Okay.
For every $100 Fair Isaac makes, $43 is pure profit after they've covered their costs.
Okay.
That's a sign of a healthy, efficient business.
Right.
And it gives them a lot of flexibility to invest in growth.
Yeah.
And maybe reward shareholders with a split.
I got it. And on top of that, their revenue has been steadily climbing.
Yes.
From $1.2 billion to $1.7 billion in just the last 5 years.
It's no small feat.
That's no small feat.
Exactly.
And remember, we're talking about a company that's not exactly a household name.
Right.
At least not in the same way as, say, Apple or Tesla.
Right.
Fair Isaac is what I call an under-the-radar financial mainstay.
Yeah.
They quietly perform well, consistently deliver value, and that's what makes them a fascinating potential opportunity.
Absolutely.
Okay, so Fair Isaac. Strong financials, under the radar, potential split on the horizon. Let's move on to a company that definitely needs no introduction.
Yeah?
Netflix.
Okay.
Talk about a roller coaster ride.
You're telling me.
Their stock plummeted almost 75% in early 2022.
Yeah.
But then came this remarkable comeback, and now their shares are trading above $900.
I know, it's crazy.
Speaking of companies making bold moves, what's behind this impressive turnaround?
Right?
Did they just switch up the algorithm again?
It's more than that. Remember when they introduced that ad-supported tier?
Uh-huh.
That brought in a whole new crowd of subscribers.
Excess.
And then they finally cracked down on password sharing.
Yeah.
Which was a smart move financially.
Yeah.
The Motley Fool believes this resurgence, coupled with their last split being back in 2015, could mean a 10-for-1 split might be on the table.
But isn't Netflix facing increasing competition from all sides?
Yeah.
How confident are we about their long-term dominance in the streaming wars?
Well, it's a crowded field, no doubt.
Yeah.
But Netflix is still the king of streaming. Their operating margin is at a record high of 25.7%.
Wow.
And Nielsen data shows they capture almost 8% of all streaming hours.
Wow.
That's way ahead of rivals like Amazon Prime Video,
Yeah.
Hulu, and even Disney+.
Yeah.
They're in a very strong position.
Okay, I see what you mean. They're not just surviving, they're thriving.
Right.
So with this dominance and their stock climbing, it does make you wonder if a split is in their future.
It's definitely a possibility worth considering.
Yeah.
Now let's talk about a company that's been in the news lately, Tesla.
Okay. Their stock was having a pretty quiet year. And then, boom.
Yeah.
Election day happens.
Right.
Trump wins.
Right.
And Tesla shares skyrocket.
Okay, this is where it gets really interesting.
Yeah.
I remember reading that Elon Musk and Trump are pretty close.
Yeah, they are.
Do you think that relationship played a role in the stock surge? Are investors betting on some favorable policies or something?
It's possible. Investors might be anticipating a friendlier regulatory environment under a Trump administration.
Okay.
It's definitely something to keep an eye on.
With Tesla's share price already exceeding $450, the Motley Fool thinks a 2-for-1 split could be in the cards for 2025.
Right.
Especially if the price hits and holds around $500.
Yeah.
And let's not forget, they did a 3-for-1 split back in 2022 when shares were trading around 700.
Right, so they're not afraid of using splits strategically.
But beyond the political angle, Tesla has some game-changing developments in the pipeline.
Okay.
They're supposedly close to rolling out their autonomous driving technology and robotaxis in Austin.
Whoa. Robo-taxis in Austin. That's huge. I wonder what that'll do to the ride-sharing landscape.
Right.
And then there's all the buzz around their Optimus robot.
Yeah.
Wasn't there a video where it was like watering plants or something?
Yes, Optimus is generating a lot of excitement, even if it's still early days.
Yeah.
The potential for disruption in labor-intensive industries is enormous.
Right.
Think about it. Robots handling dangerous or repetitive tasks, freeing up humans for more specialized roles.
That's mind-blowing. I mean, it's both fascinating and a little unnerving, right?
Right.
But from an investment perspective, I can see how these innovations could drive Tesla's stock even higher.
Absolutely. They're pushing boundaries, which is what investors love to see.
Yeah. So we've got Fair Isaac, the financial powerhouse,
Yeah.
Netflix, the streaming king, and Tesla, the innovation machine. They're all leaders in their industries, but what ties them together is this potential for explosive growth,
Right.
the kind that might just justify a stock split.
And that's what makes this whole deep dive so exciting.
Yeah.
We're not just looking at numbers on a balance sheet. We're looking for those hints of what could be the next big thing.
Exactly. Now, the Motley Fool article also mentioned some gaming companies that might be considering splits.
Yeah.
I have to admit, I know next to nothing about the gaming world.
Sure.
It seems pretty volatile to me.
It can be, for sure.
Yeah.
But there are also some incredibly successful companies in that space.
Right.
And one that caught my eye is Take-Two Interactive Software.
Okay.
They're the masterminds behind some of the biggest games out there.
Okay.
Grand Theft Auto and Red Dead Redemption.
Oh, Grand Theft Auto.
Yeah.
I remember hearing about that. Didn't they just release a new one?
Yes.
Grand Theft Auto 6, I think it was.
Grand Theft Auto the Sixth was a massive launch, to say the least.
Yeah.
We're talking record-shattering numbers. $1 billion in revenue in just the first 3 days.
$1 billion in 3 days. That's insane.
Yeah.
No wonder investors are paying attention.
It's not just Grand Theft Auto, though.
Right.
Take-Two has a whole stable of popular games across different genres.
Okay.
And remember Zynga?
I've heard of them.
The mobile gaming giant behind Farmville and Words with Friends.
Oh, yeah.
Take-Two owns them, too.
Wait, Farmville.
Yeah.
I used to be obsessed with that game.
Right.
Maybe I should have bought Zynga stock back then.
Yeah.
So they've got everything from console and PC games to mobile gaming.
Yeah,
That's pretty smart.
it is.
Okay.
They're tapping into multiple revenue streams, reaching a diverse audience. It's about spreading the risk and maximizing the potential.
But where do stock splits fit into all of this? Is Take-Two's stock price really that high?
It's not just about the current price, but the growth trajectory.
Mm-hmm.
Analysts are expecting Grand Theft Auto the Sixth online component to be a huge moneymaker for years to come. And Take-Two has other promising titles in development.
Oh, okay.
If that momentum continues, their stock price could climb significantly, and a split might be on the table to keep the shares accessible.
So it's about looking ahead, anticipating continued success.
Right.
Okay, that makes sense. What other gaming companies are on the Motley Fool's radar?
Another one is Activision Blizzard,
Okay.
the folks behind Call of Duty, World of Warcraft, and even Candy Crush.
Activision Blizzard, right. I remember they had some controversies a while back,
Hey, they did.
but they're still a major player in the gaming industry.
Absolutely. And despite those challenges, their stock has remained resilient. In fact, they recently merged with Microsoft,
Right.
which has definitely piqued investor interest.
Oh, right. That was huge news.
Yeah.
One of the biggest acquisitions in tech history, I think. What does that merger mean for the future of Activision Blizzard?
Well, it gives them access to Microsoft's vast resources and global reach.
Right.
And it positions them as a major player in the rapidly evolving world of cloud gaming.
Cloud gaming. Okay, break that down for me.
Imagine playing the latest and greatest games on any device like your phone or tablet without needing a powerful console or PC.
Oh, wow.
That's cloud gaming. All you need is a decent internet connection.
Wow, that's pretty amazing. So the game is streamed to your device and you don't need all that expensive hardware.
Exactly.
That's a game changer.
It is.
So with this merger and the potential of cloud gaming, do you think a stock split is a real possibility for Activision Blizzard?
The Motley Fool seems to think so,
Okay.
especially if the integration with Microsoft goes smoothly and they can capitalize on this growth in cloud gaming.
So we've got Take-Two riding high on the success of Grand Theft Auto the Sixth,
Yes.
And Activision Blizzard now part of the Microsoft empire and ready to take on cloud gaming.
Right.
It's exciting stuff, but are there any risks involved that investors should be aware of?
That's a great question. No investment is without risk.
Right.
With Take-Two, they are quite reliant on the success of their big franchises, especially Grand Theft Auto.
Yeah.
If that franchise starts to fade, it could have a big impact on their bottom line.
So it's a bit like putting all your eggs in one basket.
Exactly.
You need that basket to be super strong.
Exactly. As for Activision Blizzard, merging two huge companies,
Yeah.
especially with different cultures and systems,
Right.
is a massive undertaking.
Yeah.
There's always a chance things could get bumpy along the way.
Makes sense. And what about the gaming industry as a whole?
Mm.
Are there any trends or challenges that investors should be aware of?
Well, one thing is for sure,
Mm-hmm.
the gaming landscape is constantly changing.
Right.
New technology is always emerging.
Right.
And what's hot today might be old news tomorrow.
So adaptability is key.
Absolutely.
You got to stay ahead of the curve.
Absolutely. And then there's the competition from mobile gaming.
Yeah.
Smartphone games are getting more sophisticated and engaging all the time.
Yeah.
They're grabbing a bigger slice of the gaming pie.
Right.
And that's something both Take-Two and Activision Blizzard need to navigate.
It's like everyone's got a gaming device in their pocket these days.
Yeah.
It's definitely a challenge,
Yeah.
but also an opportunity.
Right.
Yeah.
Companies that can adapt to this shift towards mobile gaming, embrace new technologies like cloud gaming, and continue to create compelling content will be the ones that thrive.
Okay. So we've got the potential for stock splits, the Microsoft Activision Blizzard merger, the rise of cloud gaming, and the challenge of mobile gaming.
Yeah.
The gaming industry is clearly a dynamic space with a lot of moving parts.
It's a sector that rewards those who can anticipate trends and execute their strategies effectively.
Speaking of dynamic spaces, the Motley Fool article also touched on a sector that's been generating a lot of buzz lately, artificial intelligence.
Ah, yes. AI. It's on everyone's mind these days, and for good reason.
Yeah.
It's already impacting our lives in so many ways, and its influence is only going to grow.
I know AI is a pretty broad term that covers a lot of different technologies and applications. But what are we talking about specifically in terms of investment opportunities?
Mm-hmm.
Where's the smart money going?
One area that's particularly interesting is the development of AI chips. These are specialized processors designed to handle the complex computations needed for machine learning and other AI applications.
So these AI chips are kind of like the brains behind the AI revolution.
Exactly. And the demand for these chips is skyrocketing as more companies and industries jump on the AI bandwagon.
That makes sense. So who's leading the pack in this AI chip race?
Mm-hmm.
Who are the companies to watch?
Well, one name that immediately comes to mind is NVIDIA.
Okay.
They're the dominant force in graphics processing units, or GPUs,
Okay.
which are essential for AI training and development.
NVIDIA, right.
Yeah.
I know them from the gaming world. They make those super powerful graphics cards that gamers love.
That's right. But their GPUs also happen to be incredibly well suited for AI workloads.
Oh, wow.
They've become the go-to choice for researchers and developers in the AI field.
So NVIDIA is using its expertise in graphics to dominate AI chips as well.
Yeah,
That's pretty impressive.
it is.
But is anyone challenging their dominance?
There are other players in the game, of course.
Right.
Companies like Intel and AMD are also developing AI chips and making progress.
Okay.
But NVIDIA is the front runner for now.
So for investors looking to get into the AI chip game, NVIDIA seems like a good bet.
Yeah.
But we've been talking about high stock prices and splits. Is that something that's on the table for NVIDIA?
It's definitely possible.
Okay.
They've split their stock several times in the past, and with their current trajectory, it wouldn't be surprising to see another split in the near future.
So we've got NVIDIA leading the way in AI chips.
Right.
What about other areas of AI? Any other investment opportunities highlighted by the Motley Fool?
One area that's really intriguing is AI-powered software and services.
Okay.
This covers a wide range of applications, from natural language processing and machine vision to predictive analytics and personalized recommendations.
So it's not just about the hardware, the chips, but also the software running on those chips and the services powered by AI.
Precisely. And there are tons of companies out there developing innovative AI software and services across different industries. It's a vibrant and exciting landscape.
So where should investors even begin if they want to explore these opportunities? Is there a particular company that stands out?
One company that's making waves in the AI software space is C3.ai.
Okay.
They're a leading provider of enterprise AI applications. Basically, they help businesses automate tasks, improve efficiency, and glean insights from their data, all using AI.
So they're helping businesses harness the power of AI to solve real-world problems. That sounds pretty impactful.
It is.
But is C3.ai a proven player, or are they still in the early stages?
They're definitely a company on the rise.
Okay.
They've been growing rapidly and have secured some major partnerships with big-name companies.
Oh, wow.
They're definitely a company to keep an eye on.
It sounds like they have a lot of momentum. But as with any emerging technology, there's always some level of risk, right?
Absolutely. Investing in AI software companies isn't without its risks. The technology is still rapidly evolving, and it's hard to predict with certainty which companies will ultimately come out on top.
So it's important for investors to do their homework and understand the potential downsides before jumping in.
That's always good advice, regardless of what sector you're looking at.
So we have NVIDIA leading the charge in AI chips and C3.ai making a name for itself in AI software.
Right.
What a fascinating world we live in, right?
It really is, and it's only going to get more interesting as these technologies continue to develop.
Yeah, it really is amazing to think about how AI is shaping the world around us.
Yeah,
And as investors, it's definitely a space we need to be paying attention to.
absolutely.
Oh,
But before we get too carried away with the potential of AI,
right.
let's circle back to something we touched on earlier.
Okay.
The idea of high stock prices as a potential indicator of future splits. It's a bit of a chicken and egg situation, isn't it?
It is. A high stock price can sometimes become a self-fulfilling prophecy.
Right.
You know, if investors think a stock is likely to split,
Uh-huh.
they might rush to buy it,
Yeah.
pushing the price even higher
Yeah.
and making a split even more likely.
Exactly.
Yeah.
But we can't forget about the fundamentals.
Right.
A company's stock price should ultimately reflect its underlying value,
Uh-huh.
its earnings, its growth prospects, and its overall financial health.
Right. A stock split might make the shares more accessible and generate some buzz.
Yeah.
But it's the company's performance that really matters.
Right.
It's like a fancy sports car.
Yeah.
It might look impressive,
Uh-huh.
but if it doesn't have a powerful engine,
Right.
it's not going to win any races.
I like that analogy.
Yeah.
So as we wrap up our deep dive into potential stock splits for 2025,
Okay.
let's remember that while splits can create interesting opportunities,
Yeah.
they're not a guarantee of future success.
Exactly. It's important to do your research, understand the companies you're investing in,
Right.
and be prepared for the ups and downs of the market.
Yeah.
And as you always say, diversification is key.
Absolutely.
Don't put all your eggs in one basket.
Wise words. We've covered a lot of ground today, haven't we?
We have.
We explored potential stock splits across different industries,
Yeah.
from those under-the-radar financial companies to the giants of streaming, gaming,
Yeah.
and even artificial intelligence.
Right.
We've talked about what drives stock prices,
Uh-huh.
the importance of understanding a company's fundamentals,
Yeah.
and why diversification matters.
It's been a fascinating journey for sure.
Yeah.
And as we wrap up,
Yeah.
I want to remind everyone that this is just a starting point.
Right.
There's a whole world of investing out there
Uh,
with countless other companies and sectors worth exploring.
absolutely. And as always, we encourage you to do your own research.
Yeah.
Maybe talk to a financial advisor if you have one.
Right.
And remember to only invest what you can afford to lose.
Great advice. Thanks for joining us for this deep dive, everyone.
Yes, thank you.
We hope you learned something new today.
And we hope you'll join us next time for another exciting exploration. Until then, happy investing.